Hi everyone, welcome to Value. So today we're going to look at the stock market, and it is blood on the street everywhere. It is full out red, and it's just insane how much the big names are dropping. Like, you're looking at Palantir, negative 22%, and that's just for today. Never mind what's happened in the last few months. This stock was like trading well above 20s. Now it's like 738, which is insanely low. But we don't actually know where the end is, because as interest rates are rising to counter inflation, the market is just getting destroyed over this. We look at like Rivian negative 19%, Tesla negative 7% today, and then we look at Square, which is Block now, which is negative 15%, and we're looking at Coinbase negative 18%. But there's a reason why Block and Square is negative, because Bitcoin is down as well. So yeah, like nothing is predicted. Bitcoin is at around 30,000 right now, which is quite the massive drop. Like if we go back a month ago, around 40,000. Now it's 30,000. It's just dropped so much. That yeah, like markets are just being destroyed over this. US makes biggest interest rate rise in 22 years. So you can imagine just the chaos that's happening, because markets are being, every time interest rates change, market gets re-rated in a sense, and yeah, stocks just get hammered. Performances, there's a lot of expectations on these performances, and currently tech is not measuring up, and interest rates are just rising. So then people are just taking the capital out of the market. They don't want to invest in these stocks anymore, because there's a lot of uncertainty, and nothing kills a market more than uncertainty. So as the headline puts, like the US central bank has announced its biggest interest rate increase in more than 2 decades as it toughens its fight against fast rising prices. The Federal Reserve said it was lifting its benchmark interest rate by 0.5% to a range of 0.75% to 1% after a smaller rise in March. With US inflation at a 40-year high, further rates are expected. So that's the kind of difficult part, because we're watching rates rise by quite a bit, and then there's no clear sign when it's going to stop either. It's gonna we can probably expect some more rate rises. Inflation is too high, and we understand the hardship it is causing. So that's a problem. Like, you've got a problem in reality where people have to live. They're facing really high prices, and then you've got this other part where people are investing in markets, and markets are shrinking because people don't want to keep their money there. People can't afford to keep their money there. People can't, people just don't have enough spending to go around with these companies, and they're not meeting their targets. Uh, yeah, and in general, things are just dropping in the market because people don't have enough to spend, right? So you're not investing, you're not saving if you're spending, and with everything so high in pricing these days, you can kind of see how it's ending up right now. Like, people need money to spend, so basically they're not saving, and they're not investing. And with high inflation, things continue to get more expensive. People spend less because they can't really afford to buy more things, because everything's so expensive. And what kind of makes it worse is that interest rates are going up, so it kind of makes their mortgages even more expensive, and it means they can spend even less, which has a double whammy on the market, because firstly, companies are not performing, and then now we have consumer confidence much lower, and they're going to spend less, and they're going to have less money, because also interest rates are high. They're going to have to service their mortgage, and servicing their mortgage is going to take away a lot of their money, which in turn leads to even less sales for companies. Companies don't perform, and the market continues to drop, and drop. And hence why we're in this situation where it's literally like a bloodbath. And do I see kind of like a turnaround? Like, eventually there is always a turnaround, but I don't think it's the end right now. Like, it's kind of depressing that, hey, markets are quite low. Like, we're looking at Palantir and we're going, is this the end? Or looking at Rivian, like, these stocks used to be, market darlings. People used to love these stocks. Tesla's by far the one that we're watching and going, there's a huge valuation for this company. Is this bubble just gonna pop, or is it just going to, hold still? It was like with 833 billion valuation. It literally goes anywhere. Like, it is held up by people, but it could be very quickly sold down as well. So that's the questions around, these stocks that, hey, take it back 12 months ago and these stocks were amazing. Now we're watching a whole different environment just play out right now, and it's not looking nice. It is not looking nice. Like, you might be very tempted to buy, but the biggest question is, like, is this the bottom? Like, it doesn't feel like the bottom. Like, even though it's dropped so much, if the rates just continue to rise, the slaughter just continues, and you just have to be realistic about that. You just have to watch how things go, which is also a very tough market, because it's like, oh, hold cash, but then your cash is being decimated by inflation. Hold stocks, but then stocks is being decimated by rising interest rates. So where do you put your money? Because everything's just being obliterated, right? Like, that's a kind of problem at the moment. Like, nothing's really safe, which is causing a lot of uncertainty, a lot of fear, and in kind of making it difficult to invest properly. The more or less you just kind of have to just diversify. Like, there is no way to really get around these things by being concentrated. Like, right now, things are just being destroyed, so you just have to have a very risk-averse approach and kind of go for more stable kind of situations. Because, like, right now, growth stocks, tech stocks, however you put it, like, it doesn't mean that there's no opportunities in the market. I think there's just no opportunities in the big names, because they've always been fully valued, because everyone's always paying attention to them. So the herd mentality tends to be much stronger in names like Tesla, Rivian, Palantir, even Bitcoin, because everyone's in it. So when they start to withdraw their money and they start to pull out of it, that's where you kind of see things just kind of shrivel up in these kind of situations where the valuations just drop quite highly. So regarding, like, what happens next is keep an eye on inflation, keep an eye on interest rates, and when those things kind of start to turn around, that's when we see the light at the end of the tunnel. But right now, I think we're still in a very tough situation where inflation's not slowing down, so interest rate rising will not slow down, which means there's probably a bit more pain to go, which kind of means, like, you kind of want to just stay away from the markets for a little bit. Like, I'm not saying you don't want to invest in the markets, but I'm just saying, in general, you just want to, your exposure, you just want to just, like, do it slowly. Don't jump head first and hope for the best. Like, you need to make sure you don't take too much of a risk right now, because, like, if you put all your money here and then things drop, you've actually got no more money to average down, your ability to average down. So always keep a little cash on the side. Invest in strong companies meaning the ones that are more profitable, the ones that don't need to raise money, because as I put yesterday, like, I think it was like with Tattoo Chef, they are looking like they're going to run out of money, and if you're a stock that's dropping, then running out of money at this stage is probably a very tough spot to be in. So we kind of mentioned this, like, it's dropping today, but not too badly in a sense, but still dropping, like, and if this company says to the market it has to raise money, then it's quite a bad situation. So you just want to stay away from companies where they're running low on cash, go towards the ones that have cash, the ones that are in a profitability situation. And I think that's how you want to play it for now. Like we also went through Lockheed Martin, and basically, so like the market's down quite a bit, but they're only down 2%. So you can see where the strong ones kind of hold their ground, and that's kind of where you can kind of shelter. Like it's not even looking at it's not even about making a gain right now. It's about where do you put your money to shelter yourself so that you don't kind of lose in a big way. And it probably could be one of these stable companies where you kind of, can ride out the waves for the time being, while the market just kind of tries to figure itself out. Let me know what your thoughts are on this current market. Like, it's an eye opener. Like, it's not the first time we've seen markets drop a lot. We know it comes back, but the question is when. And for the time being, you just want to be in something that's stable, something that just holds itself. It doesn't necessarily mean it has to be like Lockheed Martin. It could be something else. But it's one of those situations where you gotta think differently. You gotta think about the companies that are actually performing, regardless of what's happening right now, regardless of inflation, and regardless, it's probably not that ideal to invest in companies that are very consumer driven entirely, because consumers are in a really, really tough spot right now. They're facing inflation. They're facing high service rates of their mortgages. So those to itself is going to basically decimate consumer confidence and their ability to spend. So I would be a bit cautious around consumer type companies, because consumers are facing a tough battle right now. And there's not a lot of confidence that's things are turning around. Like maybe if they're a smaller company or they specialize in certain product, things won't turn around. Say, was it the COVID kind of treatments? Like we can think about Pfizer and we go like, oh, okay, Pfizer might be one of those companies that potentially might be okay because they're selling a product that is quite essential. I don't actually know if they've been dropping today. Actually, let's do a quick look. So look at the Pfizer. Like Pfizer is barely down today because it's probably dropped a bit in the it's been a very, very volatile ride for them for the past month. But overall today they're actually holding their ground. So that's an example of a company that's kind of holding its ground, where everything's just being sold off quite heavily today. And even say like Johnson and Johnson, they're actually slightly in the green. So there are names where you can actually head towards, where it's kind of like the stocks that are holding the ground, but you just want to watch it quite carefully and go, if consumers can't afford to spend as much in the future, who's going to benefit and who's going to be hurt severely. I'm kind of surprised Walmart's kind of up, because I guess they're doing well because consumers have to buy no matter what, and I guess with higher pricing, people give up luxuries so they can go towards more cheaper goods, and probably Walmart is one of those places that probably does well because people are kind of switching high spending habits to lower spending habits with kind of cheaper items, and then it might be the case where Walmart kind of does succeed. It's an interesting market to be in. In a sense, it's always interesting, every year we're always throwing a curveball and we've got to go, how do we navigate this? And then how do we get out of it looking a lot better than we are right now? Current situation's tough. So tread carefully, don't have patience and kind of see how things go. Until then, good luck investing around. Let me know if you've got any questions, or always happy to hear your opinion. Post below. Until then, we'll see you next time.